Imagine turning your birthday money into a fortune. No magic, no scams, just smart investing. You don't need a lot of cash or a fancy suit to start. Even a few dollars from your allowance is enough. Investing means buying a small piece of something you believe will grow in value, like owning a slice of Apple or Nike. When those companies succeed, your investment grows too. The real secret: time. As a team, you have more of it than anyone else. Time lets your small investments grow into something huge. Most adults wish they'd started investing when they were your age. Investing isn't gambling or chasing quick riches, it's a long-term game. Think of it like planting a tree. You plant a seed, care for it, and watch it grow over years. Your money can do the same if you start now. You don't need to be a genius or predict the future. Just start small, be patient, and let your money work for you. Every dollar you invest now is a step toward financial freedom. The earlier you start, the bigger your fortune can grow. Don't wait for the perfect time, start today. Your future self will thank you. The most powerful force in finance: compound growth. Here's how it works. You invest money, earn returns, and then earn returns on those returns. It's like rolling a snowball down a hill. It gets bigger and faster as it goes. The longer your money grows, the more powerful compounding becomes. Starting young gives you the longest hill for your snowball. Even small amounts invested early can grow into huge sums over decades. For example, invest $1,000 at age 15 and let it grow at 8% a year. By 65, it could be over $21,000. Wait until 35 to invest that same $1,000. You'd only have about $4,600 by 65. The difference is time, not effort. You don't need to be rich to start, just consistent. Compound growth rewards patience and early action. The sooner you begin, the more your money can multiply. Don't underestimate the power of starting now. Let your money snowball for as long as possible. Time is your superpower. Use it. Start compounding today. Ready to invest? Here's what you need to know. Stocks let you own a piece of a company. High reward, but higher risk. Bonds are loans to companies or governments, safer but lower returns. For beginners, the best choice is often ETFs or index funds. These let you invest in hundreds of companies at once, spreading out your risk. It's like owning a tiny piece of the whole market. Index funds track the overall market so you don't have to pick winners. An S&P 500 index fund, for example, invests in America's 500 biggest companies. This strategy is simple, effective, and proven to build wealth over time. You don't need to be an expert. Just start with a broad market fund. Diversification protects you from big losses. It's the easiest way to get started. Under 18, you'll need a parent to open a custodial account for you. This account is in your name, but your parent manages it until you're an adult. Talk to your parents about your goals and why you want to invest. Most will be excited you're thinking ahead. You can open custodial accounts at major brokerages like Fidelity or Vanguard. The process is simple and can be done online. Start funding your account with money from allowance, gifts, or a part-time job. Many brokerages let you buy fractional shares so you can start with just a few dollars. Learn before you invest, watch videos, read articles, and ask questions. Understand what you're buying and why. This is your money and your future. Take charge of it. Building financial knowledge now sets you up for life. You've got your account and some money. Now make your first investment. Start with a broad market index fund or ETF, like VTSAX or VOO. This gives you instant diversification and steady growth. Invest regularly, even small amounts. This is called dollar cost averaging. Consistency beats trying to time the market. Avoid chasing hype or hot stocks you see online. Stick to your long-term plan with proven funds. Don't panic when the market drops. Downturns are normal and temporary. Selling in a panic locks in losses. Staying invested lets you recover. The best investors stay calm and keep investing, even during tough times. Ignore the noise and focus on your goals. Investing is a marathon, not a sprint. Every dollar you invest now is a gift to your future self. Start simple, stay consistent, and keep learning. Your journey to wealth begins with your first step. The sooner you start, the bigger your rewards will be.
Subscribe for more simple money guides.